Well, the Fed just pulled the trigger on a quarter-point interest rate cut. Second cut this year. So this brings the rates to 3.75%, 4% in that range, pushing them below that 4% average for the first time in 3 years. So what does this really mean to you? Let's bring in now Dale Smothers to break it all down, President and CEO of RDS Wealth Management. Dale, good to have you. So this was largely expected, right? But you know what's interesting? They made this cut without all the usual government data, thanks to the ongoing government shutdown.
Yeah, it's to be expected. And honestly, you can look at the market and it shows right away that they were expecting it. The market has already priced in this rate cut as well as December's rate cut. Most likely, the spike that we saw start whenever Jerome Powell stands up and starts talking is a small sell-off there. But we've bounced back and we're going to end up pretty flat for the day. This December rate cut is really in our scope now, because if this December rate cut comes to not actually take place, it may cause a little bit of pullback in the market. What does it mean to investors? Well, there's still a lot of the story to be told. The Fed is walking a tightrope right here, Alicia. The Fed has to balance making sure that the labor market doesn't suffer, along with making sure they don't pour fire or fuel on the fire that is still smoldering, called inflation. And again, a lot of the story is still yet to be told.
Yeah, well, you mentioned inflation, the job market. The only numbers we really saw since this government shutdown was the CPI numbers came in cooler than expected. Did that influence the decision at all? Or is it really just the labor market? That's the main concern.
Labor market's main concern. And the reality is the Fed is focused on the labor market with due reason. A lot of variables involved in that. The Fed chair comes out and says that, this may be the new normal. Ironically, he says that there aren't a great deal of layoffs. There also aren't a lot of people, quote unquote, looking for jobs. It may be immigration related. So a lot of his story caused this uncertainty, and uncertainty is going to cause a sell-off in the market if we don't have some guidance. So we're really looking for this government data. With government shutdown has to end. We've got to get government data in front of the Fed, and they've got to make clean decisions based off of data, not emotion.
Okay, so the second cut this year, we're expecting more cuts before the end of the year. What is this? We know what it means for investors. What does it mean for the average American? Mortgages, American wallets. What does it mean?
Yeah, ironically, this may not mean immediate cuts in your mortgage rates because that is governed by the 10-year. And we saw the 10-year take a slight uptick after the announcement, just a little bit, but it took an uptick, which is the opposite way that you would expect it to be. And it means for savers that we will see a slight decrease in the amount of money that we get from savings. So we could have this dichotomy starting to form where we have not as much money in the savings account making money, right? We don't have as much money being made. And it's also still costing us just as much to buy homes. I don't think that we're going to see a lot of resolution going into the end of the year. The only thing that may come is a little bit more uncertainty. Here's what we have to look forward to in 2026, which is a new Fed rate, a new Fed chair rather,
right,
and likely continued cutting of rates, getting us to that 3% target, which has been the Trump administration's goal all along.
All right, so the average American maybe will feel this more next year in 2026. Dale Smothers,
Certainly.
President and CEO of RDS Wealth Management. Thank you, my friend. Appreciate your time.
Thank you. Yes, ma'am.
You got it.